It's better to make money than to be right. So, hey everybody, I hope you had a great trading week. It was a fun one to say the least. We finished strong. Now I've got 10 names that we're going to go through. We're going to kind of do this old school as we used to do that. And at the end, stay, because I really want you to see some of these more macro charts and what's going on with them. But let's just jump right into it. The first one you have to watch now, and I mean have to, is Tesla. This is one earlier in the week I just had a huge short bias on, and quite frankly, I wasn't right. And the one thing I want to say about that, it's better to make money than to be right. So if you're wrong, just admit you're wrong and move on. Sometimes there's a trade on the other side, but if you don't get out of the way and take a look, you're never going to make it. But the point of reason I'm bringing this up is, from here, it looked to me like we were going to clearly reject, and I'll show you the line. Now, when I see patterns, what I do is read patterns. So I've got this trend line here, I got right to it, right? Now that should remind you of another pattern right here. And remember, stocks have personalities. They trade like the people that trade them, okay? So you can see how bonk, 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 how this looks similar here, right? So to me, that and then hitting the 50, that was it. Now, we had bad numbers today, right? We know those jobs numbers that came out, non-farm payroll, substantially higher than we thought that they were going to be. So you can see clearly right here, non-farm payrolls came in at 372 versus 268, all right? That is substantially higher than we expected. Again, this is investing.com. I always use this free website when I go over this data. Why? Because it's free and it helps you understand how to look for these numbers and gives you a great spot to look for them. But you see this right here? That shows that you added more jobs than you expected to add, which is not good. The reason it's not good is because it shows that we could be in a position where they're going to wind up raising rates and keep pushing rates. Here, let me show you this. So if somebody told me, this is the 10-year treasury, if somebody told me today that we were going to go to 310 and equities were going to rally, I would have told them they were crazy. But this is what I'm saying. You have to come in and have a plan. And then when you have a plan, you have to be willing to accept that you're going to be wrong and look for signs that you're wrong so that you can make money from it. Because that's your goal, not to be right. Your goal is to make money. And people don't get this, that's two separate things. You can come in with a bias, but just respect what price is telling you. So what this means is we had negative news. We're seeing that we're definitely going to raise 75 basis points coming up. And they might even raise again the month after, at least maybe 50 basis points by the way that this is going. And what happened today? Tesla broke out. Tesla broke out. And now you're above the 50-day. You need to watch this higher high. This is something we actually, again, flipped at 736 and are in the trading room. What I would suggest is just watch this higher high, 765. If you get above that 765 level, here, look at this right from here. And you can just kind of see this level really clear that way. I'll just highlight it, but you can see where that higher high is. If you can flip that 765, which just happens to be exactly where you stopped today, right? I mean, that's really no coincidence. We all know that. We know this is how the game's played, right? Wicks or price rejection, and there's a really clear example of one going straight across. So once we get over that level, I think you push. And I think you could push to the next big wick rejection, which is 793. The other thing I'd point out about this, and I think it's really important to understand, we are over the 50 line on the RSI. The volume line is starting to increase. Last time we were this high over RSI was actually back in March, and that was the single greatest move of the year that we had. So we are setting up for something like that. So this one is actually from the newsletter. If you don't get the newsletter, there's a free version in the link in the description. It comes out Monday, Wednesdays, and Fridays. Mondays I go through what you should know for the week. Fridays is a recap, and Wednesdays the stock ideas and the indexes. So here's where we're in from the newsletter. And just to point this out, we're up, I don't know, $12, $13 on that position. Look, this is another break, another ad. We have that saying, first mouse gets what? The trap. Second one gets what? The cheese, right? I mean, even O'Neill has a whole trade here where he'll increase the position size on the second breakout, right, versus the first breakout. And that's exactly what you do here. And then boom, and then you push. And I think that's where you're heading. Now take a look at this on the weekly. So you can see this. Now for those that were in the trading room or in the educational class, this is a really simple trade, right? We just went through these 3-bar patterns. Okay, look at where you're at. So this fits perfectly. That fits that dynamic perfectly on what we were talking about. And I would really pay attention to this. Biotech is the hottest sector. We're going to go over a couple more in that space today. But I do want to talk about what's transpiring out there and what we can do about it, right? How can we make money from this? You need to start paying attention to stocks now that are hitting higher highs. Again, this is another one where I came in, I had puts. There's no way this is going to break out, right? Goldman downgrades it. Best case they're saying is 130. Bear case they're saying 82. Goldman's no slouch with their research. When they say things like that, you need to pay attention. Stock did not care, did the exact opposite. The equation is bad news, stock moves higher, it's bullish. It's that simple. Don't overcomplicate it. Here's your wedge line, you broke that. You figured you might get some flim-flam where they close this over that 50, but they didn't. You have confirmation that this is that this is a bottom. Now, whether that holds or not, or re-roll, remains to be seen. You could come back down, test, and bounce around in here for a period of time. But I have to respect what I see here, and after I run up, come back, cut, overcut this high, close over the 50, I have a stock that's starting an uptrend. I mean, we can say everything we want about production and everything's off and what Goldman did, but price is price. The rest is conversation. And you can see this pretty clearly right here. Please subscribe to the channel and click all notifications. I put out videos that are timely and you only see if you are subscribed and only if you clicked all notification. But you can see what's going on right here, right? So it's a very simple trade to see if it follows through. Follows through, gets over this little wick right here, and we could continue to push. We can probably get up to that 151, 152 range. And if we can start getting up here, these moving averages like the 50 or the 21 are going to start catching up to us. And once they start catching up and turning up, for example, this 21 will start turning up if I just go flat, and as long as I stay above it, I'll start turning up. That's what you really want to look for, names like that. And I think you want to be in the leading names right now because that's where the money's going. There's one I want to go over that is not a leader. There's a couple I want to go over that are not leaders, but you need to just kind of look at where the money's going. Now, this is something, again, if you followed along in the newsletter, we've been in for some time. First position was down here. We had a nice little double bottom off that wedge. We took a shot. It paid off. We had like a 30-cent stop, and we did okay with it, right? I think we have a double in it right now already. Not many people have a double in a trade right now in equity. Maybe in options, but in equity, I don't think so. So you have to pay attention to when something like that happens. Now, I've got the 21 crossing the 50. Okay, we added again here, again, if you follow along in the newsletter, right, at 690. We had this wonky right here, basically gravestone, which I'm like, okay, maybe the trade's busted. But you always wait for confirmation to make sure that it is before you pull the trigger. So the reason I'm giving these little tidbits on where to put stops is because people leave comments. I create content based upon the comments. So if there's things that you want to see or questions you have, please put them in the comments. It helps me greatly in creating content. But you can see where the next level is, right? For those of you that know what this is, I might actually do a whole video on this. But you might have heard of like Darvis boxes or ever seen them or heard at least heard of them. I mean that's pretty much could be in a textbook. Okay, that could legitimately be in a textbook, and that's going to be our third BPA for the group. So I'll just give that to you. I mean it's pretty clean, right? Like that's not that hard to see. Overlay that with this. Look, right? Don't overcomplicate it right now. Don't start thinking that you're an economist worrying about where the 10 years going and what's going on with home sales in Phoenix. I look at all that stuff and I have a macro view on the market, but I have to respect price. I could go to $15 and then the recession's worse than we think, and then this comes all the way back down. Meanwhile, I make more money, right? So it's just let the price tell you what it's going to do. But this space, it's on fire. There's nothing even close to it. If you take a look at this was another box I was showing someone in the trading room today. But this is XBI. And I'm going to just tell you, I would look at XBI for biotech versus IBB. Why? XBI, the largest position, is 1.5% of holdings. IBB has 7-8% weightings. So this gives you a more diversified look on what's going on. Remember, when biotech came in, okay? And we're going to go through some of these statistics at the end here. But when biotech came in, you were trading at something like 25% of the names were trading under cash value. So that's why you start to see a couple mergers right now. And there's actually one merger we're going to go through in a minute here. Different space, but you're going to start seeing more of this. But you have to start looking at XBI and you have to start thinking about, okay, what's that going to lift up? Like, where's that going to take us? Well, that's going to take us to things like this. If Tesla's going to break out and Apple's going to hit higher highs, then the Qs are just a matter of when, not if, right? So here's your trend line on that. Very simple trade. All we're waiting to do is see if you can break this level. Here, look. Let's move this out of the way. Let's move this down. And just look at this box. I mean, it fits, again, perfectly. So don't overcomplicate it. There are certain indicators that should be used at certain times, okay? These boxes that I'm showing you right now, they should be used now. That whole video that I did, hopefully you watched, I'll link it at the end, Advanced Ichimoku Secrets, like how to really use that. Let me show you this really quickly so you can see this. But this is just the perfect layup stuff because you need signs that tell you you're coming out of a base. Nothing leads an indicator. There is no better leading indicator for coming out of a base than this cloud, the Ichimoku cloud, period. So there just isn't. It's that simple. The guy that created it, he literally took 30 years to create that. So you might want to watch that video. It's 12 minutes, not to watch. Took him 30 years. Anyway, let's just keep going here. But you see where we're going with this. So there's no way that these stocks are going to trade up and this is not going to trade up. It's just, it doesn't work that way, right? So we're looking for the leaders, but if you're trying to figure out how to play it, you know, if I break out of that box, you might want to take a look at that. Might be interesting that we might break out of that box by the time the 50-day catches up with it, right? You know, you can kind of look down here and see where the volume's going. I always make sure you color your volume. There's just a little pro tip because you can see a wave of green, right? You have this whole sea of green down here spurted with a couple reds. But for 2 weeks now, we're seeing green, and that's something to consider. So I expect this, and I expect leaders to keep moving. If you take a look at like Amazon, I'm not crazy about it here. But again, if you took this little section right here and just said, I'm going to wait till I flip right over this level, the 118 level, well, that's going to get us exactly where we need to be. Now, if you could turn up here and go, that's exactly what you want. So that's what we have to see what happens, right? And that's really the most important thing. We have to see this flip before we get involved with it. But if it does, now I have leaps on this. I'm not up in the leaps, but I have a hard time believing this is going to stay depressed going into the Christmas season. If you look at this on the weekly, and I would recommend that you run all your charts on the weekly. I showed this earlier in the week, and you can see this line right here, right? Look how you held. Bonk, 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 like over and over again, right? Groundhog Day. There it is. So it shows you where major support is. If it breaks that level, you have a problem. So that's what I would focus on. I would focus on that level. Now, MNST is one, Monster Beverage. We've been in this one before. It's been on the list before. It was actually in one of the top 10 probably about a couple weeks ago. And it's doing very well. I think we broke out of here, and I said to look at it. I have to go back and study that. This might even have taken you out, but watch this line. You've gotten right to it. Bonk, bonk. Sometimes when you knock on a door enough times, it finally does open, right? So just watch that level and see how it goes. But if Monster can get up and over, I mean, you can even use that wick, then that's something you'd probably want to take a look at because now you have a higher high. And that is a huge cup. Maybe you make a handle on that cup, right? You have a little handle here and then you go. But just watch this. I don't know if we do that, first mouse, second, right? I don't know if that happens. Here, let me show you what I'm talking about. So I don't know if we're going to do this, right, and form that handle of that giant cup and then do this. You never know. So you just want to watch. Sometimes cups can be built without a handle. So just keep this in mind. But it's definitely one when you look at it on the weekly. I mean, that doesn't get any cleaner. Look at where that closes, right? I mean, you've only closed here like 3 or 4 times ever. So it's when things like that happen, pay attention. Pay attention to the increased volume as well. I'm surprised this one made it, but it's on the list. And I'll show you why it's on the list. I don't like this close. I don't really like what I'm seeing here with the close, but What I do like about it is the following. I like the idea that we had this little flag and we got over and pushed. Now, I'd like to see this continue, but this volume, you have to look at this volume. That volume is crazy. If you overlay this volume and you just look at this little thing called relative volume, right? And then you just make sure that you're over 2, and you are over 2. So that means I have 2 times average daily volume on a breakout. They're the names you want to be. Why? It's like anything else. You want to own what everybody else wants to own if you're going to trade momentum. And right now, this is what they want to buy. Now, again, if we are going to just give you an example of how you could just look at this and make your life super simple, is just think about what this would look like coming out of that box, right? And this box should be a little higher on that wick right there. There you go. And you can see this pretty clear. Boom, goes. Actually started here, right? And then goes. Look, first mouse gets what? The trap. Second one gets the cheese. Boom. And there it goes. So I would take a look at this, because if this can start going, this has a mountain to climb. And this is a 4 coming down like a stage 4, right? This is stage 1 starting to build. You know, it's not in the space that I think that it should be, but price is what matters, not what I think, right? And that's really how you need to look at it. You know, ENPH is another one. It's baffling to me, policy-wise, why we still have retroactive policies on solar. And I think that eventually he's going to have to weigh this. And I think the administration is going to have to bend on this and get rid of their tariffs. I mean, I just think it's a matter of time. When they get rid of those solar tariffs that are coming in from China, this whole space is going to move. And you've seen some of these names already anticipating that. Look at this, JKS. Look at that breakout. So I was waiting to see if the news was going to hit, but watching JKS, watching this hit here, and what's appealing to me about this one out of all of them is the fact that I come up, here's your lower right, higher low, goes, higher low, goes, higher low, goes, right? So they're stepping me up every single time. So this is getting tighter and tighter. So all I'm looking for is to flip this level. And if you take a look at it from this perspective, I'm just going to throw in volume by price, which is going to show you where you're at and where all the players are, right? You can see point of controls right here. You can see your VWAP is right there. I'm through all that. Look at how easy my life's about to get here on this. So things are about to get a lot easier on this. And I like this, and I would definitely put that on your list. Now, this was one that was not my idea originally, and it came from somebody in the trading group, and they were dead right. And then I did some research on it, was fascinated with what's going on here. This was actually trading at 30 cents of value, of book value. And they assigned a new chairman to the company. The chairman has one job, sell the company. Well, it's a growth properties company. It's a REIT. So just to kind of put it in perspective, you're looking at 30 million square feet of real estate across 45 states. Okay, it's an enormous company. And even here at 11, it's trading at a 75% discount. Or I'm sorry, it's actually trading 75 cents of its book value. I apologize. So for this to even get to tangible book value puts this at a minimum somewhere around $16 to $17, depending upon how they're looking at it. Now, for when someone buys them, you may have a discount to that. There might be cash associated with it. But the fact that they're putting the company up for sale, someone will buy this company. It's just a question of how. So this is all the old Sears, like we're all Sears, where this is how this company was created. But this is something that should definitely be on your radar as something that can continue to push higher. I think that this is just an absolutely no-brainer trade, in my opinion. I just don't see how someone's not going to step up. And I'm not alone in thinking that. If you look at this volume, remember we always want to look at volume and understand what's going on there. Let's take a look at that volume by price. You can see how you have blue skies above once you get over that level. Now look at this relative volume. Okay, it's through the roof, through the absolute roof. That is not retail. That's not retail buying, okay? That is just straight up institutional buying all day long. Now, it's important for you to understand the price to book. So this is one of the attractive things about SRG. It puts us in a position where we're actually buying something significantly below book value. You can see how this is establishing price to book value. You can see that we were over $1 in September, November. And with this correction, we have seen things get grossly oversold. We talked about this with biotech and how 25% of biotechs are trading under cash value, which made them extremely attractive for those trades that we did, if you've been following along. But why I'm showing this chart, and this is powered by Y charts, it's an expensive service, but there's some real value here. But you can see how low we were. I mean, it was insanity. And now, why the spike? The spike because they appointed a chairman and the board unanimously voted to sell the company. So if they're going to sell, okay, they're going to get close to book value at a minimum, or they're not going to sell. Someone is going to want to pick up these assets. So based upon that, it can get to that dollar range. So let's say you get to that dollar range and we're only at 75%, right? That gives us a lot of room to push here. And that's including that they only get book value. That's not including what else they might get, right? Or how the deal might be structured. We don't know if it would be a cash deal or a stock deal, but the bottom line is somebody is going to step up and acquire these assets. It's just a question of when, who, and how long. So we're always looking for patterns and we're always looking for a reason why things happen. So the graph in front of us, the top line is the 10-year treasury, and it's in comparison with JNK. JNK is high yield corporate debt, or JNK stands for junk status, bonds that are not investment grade. The spread between these determines the amount of risk that somebody is willing to take. Now, if you take a look at this, and you look at this area right here between the 15th and 16th, and you look at this gap, and you go and take a look at the S&P right now, you'll see pretty clearly that this gap, that was where we had the low come in. Since this started getting tighter and tighter, the market's starting to come up. Now you're starting to go a little higher here, but what I want to point out is this is lifting as well. So as long as this stays narrower than something like this, it bodes well for equities, even if the 10-year starts going up. So one of the core issues that I had today looking at the market was, well, the 10-year is rising. Well, the 10-year is rising, but high yield corporate bonds are rising with it, which that means that they're acting in tandem, which is exactly what you want to see. We don't want to see another disparity like this. If you see something widening and widening like that, for example, if you see one going up and the other coming down, you want to be cautious about equities. Another data point worth monitoring is how the VIX's movement is affecting the S&P, right? Because that's exactly what this is. It determines put buying. That's what the VIX is, fear index, right? So we have this trend line, and I showed this in yesterday's video, and the point of it was, hey, this is usually where we fail. In other words, this is usually where the S&P sells off. Now, we had that very negative news today about non-farm payrolls. Stock market opened down 1.5% and then rebounded on that news. During that time, we're also seeing the VIX finally break this level. It's actually below 25, which is rare. Now, the fact that we're below 25, the fact that you broke down through this channel line, which you have held right since April and been able to trade off of it, leads me to believe that we could be heading for something like we had in March, where we had a trend line here in March, but you could see that we came in off of that, right? And we had the market actually rally based upon that. So I think it's really important just to look at this and understand that we did break this. The VIX is below 25, and we do have the S&P setting up to make a higher high. So I gave you a lot to think about. I hope that makes sense. I hope that you like the video. If you do, please like it. It helps me with the algorithm and supports the channel. Comment below on if you like the content, the fact that I went back to kind of old school and how we did this one. Let me know what else you want to see. If there was too much like macro stuff at the end, there might have been, but that's up to you. And that's what I want to know. I want to know which way to go with this. And subscribe to the channel. And that's it. That's all I have. Everybody have a great weekend and trade to win this week.